So a pretty choppy start to the week. What's going on, guys? It's Ricky with TechBud Solutions. Oh, yep, that's our St. Patrick's Day sale. But let's talk about the overall market right now. So NASDAQ market with a slight sell-off to nearly break even after retail sales comes in a little bit lower than what was expected. If you guys did not know, first off, we provide this tool for you guys for free. Of course, you don't have to use our site, but it's techbudsolutions.com under trading tools. It's the economic calendar. It's provided by investing.com. And as you see today, there is a series of reports that were released. The main ones that were pre-market were retail sales coming in lower than what was expected. So not the best indication for the Federal Reserve, who's expected to meet this week. For those that do not know, I just want to remind you guys, right? Wednesday is the big day. Wednesday, we have the FOMC rate decision. So this is where the FOMC or the Federal Reserve has a meeting known as the FOMC meeting. They come together and they decide, hey, are we going to be raising interest rates, cutting interest rates, or pausing once again? I do want to let you guys know that according to the Fed Rate Monitor tool, there's an extremely high probability, as of right now, it says 98% probability that the Federal Reserve is going to pause. So that is an expectation of no rate cut, no rate increase, pause. Again, the Federal Reserve or the market, the stock market, which again doesn't matter, the Federal Reserve doesn't take it into consideration of what the stock market wants, but the stock market wants the Federal Reserve to start cutting interest rates as soon as possible. So that is what you will begin to see in the next few weeks. Everyone is going to begin to ask the question, when is the Federal Reserve finally going to start cutting interest rates in 2025? I want to remind you, there is only 2 rate cuts planned for 2025. A lot of people had a speculation that Trump was trying to drop the market to pressure the Federal Reserve to cut interest rates quicker or sooner or more than what is expected because the United States has to refinance its debt and it doesn't want to do it at the current higher interest rate. Again, that is speculation. It is not confirmed. And at the end of the day, the president has no control over what the Federal Reserve does. He should not have any form of influence. I don't care if it's Biden. I don't care if it's Trump. There is a reason that there is a central bank that is independent, away from, and should not be influenced by whoever is in office, right? So again, as of right now, there is a 2% probability that the Federal Reserve is going to cut interest rates, a 98% probability that the Federal Reserve is going to pause. And the markets are kind of all over the place. I feel like today would have been a better day to upload that video of, hey, maybe today's a day, maybe not worth trading, because the one on Friday did not age very well. All jokes aside, NASDAQ market is incredibly choppy. And if we look at the larger timeframes on the 1 hour time frame, market is still bearish, but we're not really seeing more negative news just yet. And that's the thing that I want to remind you. Why was the market selling off so consistently? Because of trade war concerns. We're not hearing much of those concerns right now. So if things, technically speaking, if things are not getting worse, then in the stock market's eyes, things might be getting better. And that's how the stock market tends to see it. If you guys remember back to 2020, 2021, that's exactly what was happening. It wasn't that COVID cases weren't getting worse. It's just that, or it wasn't that things were getting better. It's just that things weren't getting worse. And that was enough for the market to begin to recover. I want to see if that's the case this time. If tariff news, if trade war news doesn't continue to come out, naturally, the market will find its bottom and begin to recover. But, and again, that's a huge but, right? Whoa. But it's something that I want you guys to be proactive about. If you begin to hear any negative news about trade war or tariffs being implemented, then get ready for more selling pressure. I'm not going to pretend that I can predict the future. I just want to make sure that we're level-headed and we understand where the market is at right now. Short-term market, when it comes down to the past few days, kind of just consolidating, not really making new highs, not really making new lows, right? It's kind of in this consolidation range, which is why I said on Friday, hey, maybe it's a day not worth trading. Because again, when markets consolidate, I don't want to make an impulsive decision that you might later end up regretting, right? You go long, but then markets sell off if trade war concerns come out, or you go short, but then no trade war concerns comes out, and then markets begin to recover. So understand that this week is a big week because of the FOMC meeting, and if Jerome Powell, who's the head of the Federal Reserve, says anything that is negative or dovish, meaning that he intends to not be aggressive with rate cuts in the up and coming months, markets might sell off just based off of that. So a lot of speculation right now. A lot of uncertainty. And that is why I made the video on Friday of, hey, maybe it's not the smartest idea to be aggressive with trades right now, because in my opinion, direction is not super clear. You can decide down in the comment section of, oh, do you plan to go short? Do you plan to go long? Right now, we're at such a critical range where it could go either way. I'm taking it day by day. That's the way that I'm choosing to trade. So I still took a trade today. And if you're part of my LPP team, you know exactly what I'm talking about. It's just been overbought and oversold reversals. So today has been Tesla. Tesla's the weakest one out of all of them today. I talked about it yesterday in our Sunday stock talk. It was one of the main stocks that I said I was paying attention to this week. Why? Well, again, if the market continues to see any form of negative pressure, Tesla will most likely exaggerate in its sell-off. Tesla is not in a good position. Elon continues to lead the DOGE, which is the Department of Government Efficiency, and his involvement in Tesla is not as much as investors want it to be. That is why we've seen such a big toll from 488 all the way down to lows of 210 per share. As long as Elon continues to be away from Tesla, I would only imagine that this would have more of a negative influence on the stock itself. That's the way that I see it. You don't need to agree with me. We're all entitled to our own opinion, but that is the biggest concern. I voiced this concern when Tesla was trading at $400 per share. How can a company be thriving or expected to thrive if their leader, their CEO, especially more than any other company, if Elon is not as involved as he once was? Guidance for Tesla for 2025 is not good. It's losing its share in its marketplace, which again, fundamentally, I'm not talking about the hype. I'm not talking about what Tesla can be. Fundamentally, Tesla is not in a good position. So that is why you have, even to the extent where Trump had to go out of his way to promote Tesla itself. I don't agree with that action. Nonetheless, just to know that he felt the need to do it just shows how unstable Tesla has been. But remember, that was a short-lived positive catalyst. It did cause Tesla to push up for a short period of time. But guess what? Fundamentally, Tesla's not there, which is why it doesn't surprise me that it's selling off. Today, I decided to short Tesla, but as you can see, my position is now fully closed. I then ended up going long, but again, I just have my one lucky share right now. I made $8,100 shorting Tesla into the downside. Now it's oversold enough that it could maybe bottom if markets begin to recover. But again, there's so much uncertainty. Me making $8,000 is exceeding my daily goal. I'm not going to overcomplicate it. I'm not going to be greedy. I made my money and I bounced. That's exactly what I try to preach with my LPP team is get in, get out, make your money, and you bounce. Don't be greedy, right? We don't want to be like MSTR bag holders that made money all the way up to $500 per share or whatever it was trading at, $543, and then you bag hold all the way down to $290 per share. Remember, when in doubt, never be afraid to pull out. And again, MSTR is a great example of that. Of course, in every single video, I always have to give it a low blow. But again, if you ever want to watch me trade live, I do it with my LPP team every single morning. We go live for about 30 minutes to an hour. And again, you get to see all of my good trades, all of my bad trades, especially in this market full of chaos where there's a lot of volatility that's currently presenting itself. If you're just getting started and you would see value in being able to watch me trade live, to also hear my thought process behind every trade I take, the second link in the description down below will give you lifetime access to watching me trade live. And it literally breaks down to $1.35 per day with the current sale we have going on. And yes, it's the second link in the description down below. So again, I hope to see you for tomorrow's live trading session. Remember, markets right now are consolidating. It could go either way. I know that's not probably what you want to hear, but I'm being real with you, right? Like right now, things are very uncertain. We're listening. Are things getting worse, or are things actually getting better? And I'm going to take it day by day and even hour by hour, because we all know that we're one tweet away from skyrocketing or from dropping. So I hope that earned your thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.